But first, we start, as we frequently do this hour, with the morning brief. And in focus for Myles Udland, lumber prices. Now, that's something a lot of us have been watching, who've been watching inflation. And lumber has sort of been emblematic, right, of the increase in prices that we have seen. There's been a lot of demand for lumber because we've seen a lot of construction, a hot housing market. And sawmills can only cut so much lumber at a time, right? So there has been a supply constraint to some degree. We saw lumber prices really surge, but they've come back down quite a bit. So what is the lesson? What's the takeaway, Myles, from watching the lumber prices?
I mean, I just think this is the future of all of it, right? This is a transitory pressure coming into the price of a given commodity. And when the market can no longer handle continued price increases, then prices go down, right? What's the old saying? A cure for higher prices is high prices. And I think, look, certainly there's a financial element to how the price of lumber traded. I mean, it is a financial asset as well as a physical asset, and there were certainly dynamics within the futures contract. And we don't need to go through contango and all these kinds of term structure issues that faced lumber that certainly put pressure on those who were short of lumber. And were forced to cover their positions into, again, that's $1,600 or so price per board foot, which is that record that we saw back in early May. But really, we talk about the fundamental, the actual physical commodity. As you mentioned, Julie, we all learned a lot about how many mills had been taken offline. Trees take 80 years to grow into forestable trees. So that's, you can't just create more trees out of thin air. You can only harvest what exists, and you can only bring it into mills that are ready to accept new trees. And it has to be a certain type of tree. All these constraints, right, into a hugely over-demanded housing market and undersupplied housing market, we should say, created the run-up in prices. And now, as we noted in the brief, folks looking at the housing market have said there's been something of a buyer's protest as prices continue to go nuts. The biggest story that we all kind of heard in our daily lives through March and April and into May was people going to open houses where there would be 30 people through a house in 2 hours and 5 bids coming in by that night. And most of them were 20% over ask, and people were waiving, inspection contingencies and all kinds of crazy stuff happening in the housing market. Well, that period is certainly cooling off. And it, again, as we mentioned at the top of the program, this should be heartening for all of the folks who believe that economics is a real thing and that supply and demand are real things, because essentially you have consumers acting as economic actors and saying no mas. And I think that is certainly a factor within lumber prices falling. But it's also, again, it is again an example of how these commodity pressures are going to play out through the cycle and through the economy. Copper prices are starting to roll over. We saw today that retail sales for autos rolled over a little bit after a massive surge in April. And you are not going to have these indefinite price increases. These are one-time events, and it is exactly why the Fed continues to argue that all these things are transitory. And I know people are going to disagree on that, but I think, again, lumber was the first to show us how extreme some of these dynamics would get, and I think it's the first to show us the other side of this trend.
Myles, it's interesting. I'm looking at, I'm just on Yahoo Finance Plus right now. I'm looking at the move in some of these home builder stocks. You have Hovnanian shares up 175% year to date. Toll Brothers up 35% year to date. The home builders are saying, I guess to your point, they could be a benefit from two different things. One, lower construction costs. I suspect labor will still be a problem, but lower lumber costs. And then inflation is in fact transitory. You're unlikely to get rate increases this year or a suggestion of rate increases later this year. That would also be good for the home builders.
Yeah, I mean, look, the home builders, you go through their calls and you think about the way that their executive teams discuss their leverage profile, their leverage ratios, all these kinds of things. They are not bringing supply to the market, and these home builders don't really plan to. Now, depending on which builder you are hearing from, depending on their geographic footprint, they'll say there's not enough land to really create new developments. all these companies learned a very painful lesson in oversupplying certain markets back in the financial crisis. And so it is going to be a long time before any of those dynamics come in. And it also, reminds me of something that we talked about yesterday in the program with respect to shipping companies. Shipping companies doing very well right now because they can demand higher rates. Home builders, which are not oversupplying the market, are continuing to do well because they can still get the margin per home that they want to create the returns for their shareholders, create bottom line, profits. And so ultimately, I think that the housing market, in terms of what people are going to pay for homes, not going to be super impacted by the price of lumber. I know, Sazi, on the margins, yes, this stuff certainly matters, but I think ultimately it's kind of two different stories, right? You've got the commodity side of it with lumber as an indication of broader economic pressures, but I think the housing market itself is still where it was pre-crisis, which is there's just not enough inventory relative to the demand from buyers, especially at those lower price points.
Yeah, as we look at all of these dynamics, I just want to mention also, we're looking at these prices sort of coming down to some extent, right? So already showing maybe that they were transitory. And we're also watching labor costs to see if they end up being transitory, as Sazi alluded to. We've got the home builders that are maybe still grappling with those kinds of higher costs.